right, we've had the team from Fisher Funds who are bringing you this segment, guiding us through recent stock market volatility and what that means for your investments. And KiwiSaver Harry Smith, always a steady hand, is with us again to catch us up. Right, Harry, lovely to see you. Last time we were talking, we're in the thick of some pretty crazy things going on in the markets. Where are things at the moment?
Hey, Chris, it's a great question at the right time as well. At the moment, we're in the midst of US earnings season. And what that is every quarter, basically US companies update investors on how business is progressing. And so what they're saying is, what CEOs are telling us is that for the first quarter, for the first 3 months of the year, business is doing pretty well. But because of the tariffs, the uncertainty that they've created, it's making it harder for them to plan as the year goes forward.
So around the Easter break, you're standing around the barbecue talking to people about what's going on. Obviously, people are coming to you as the man with the advice. What are people telling you? What are you hearing?
Well, a lot of my friends and family, they know that I run a global equity portfolio. So I do get a few questions. I can't give them advice because I'm not an advisor, of course. I probably have been fielding a few more questions at the moment, given the amount of that volatility, the uncertainty. Over Easter, there wasn't much barbecuing, but there was a few games of cards. And one senior member of the family perhaps made a statement more than a question that caught my interest, and they said they thought the share market was a bit of a gamble, akin to a casino, if you will.
And fair?
Is it a casino?
Yeah.
No, it's not, Chris. No. But investors shouldn't treat it like one, and that's a very important point. If I think about what a casino is, or look, if we just take a pokies machine because it's more every day, you put $10 or $20 into that poker machine. Occasionally you might win, but on most occasions you're going to lose all your money because the odds favour that poker machine or they favour the casino, right? If I think about what the share market is, and if we look back through time, history, share market has generally risen and given investors very healthy returns, right? So I think the share market is, in fact, very different from a casino.
Is it a bit of recency bias, people just looking at how crazy things have been in the last few months and thinking, well, it's obviously very volatile. Is patience just the name of the game, really, and looking at the longer-term outlook? Yeah,
I think it's a great question. Look, I think the share market's not there to reward someone looking to make a quick buck, right? Like you just highlighted, it is there to reward those who are patient. And the volatility that we've seen recently shows why it's very hard to have a short-term focus in the share market. If I think about what a share price is, it's all future earnings of a company discounted back to today divided by the number of shares. So again, if we look back through history, what's generally happened? We've grown our population, we've become more innovative, we've become more productive. That's driven economic growth. Earnings are a factor of economic growth. Earnings grow, share prices rise. On the contrary to that, right, I cannot tell you what's going to happen in the next week or the next month. I do not know, and I don't think anyone is able to tell you that. So I think anyone with a really short-term focus, that moves away from investing and is more akin to speculation. And perhaps if I just build on this a little bit, over the last 7 years in the US, we've had 3 bear markets. That's when the stock market drops by more than 20%. Normally, we'd only expect to have one 20% drop every 5 to 6 years. So that's a decent amount of volatility, right? But for the patient investor, the investor that's been in US equities for that 7-year period, their return is 135% or 13% annualized. So really healthy returns despite that volatility for those that are willing to be patient.
Patience is the name of the game. You've got to hold your nerve a little bit as well. Thank you so much, Harry Smith from Fisher Funds, as always, for coming on in.